We want you to know.
In 2025, the debate over whether Bitcoin or gold is the safer and better investment remains one of the most heated discussions in the world of finance. Both assets symbolize two very different worlds, one ancient and tangible, the other digital and revolutionary. Gold has been humanity's trusted store of value for thousands of years, while Bitcoin, often dubbed digital gold, represents the financial future shaped by technology, decentralization, and limited supply. As investors navigate inflation, rising interest rates, and global economic uncertainty in 2025, the comparison between Bitcoin and gold has never been more relevant. Gold's strength lies in its timeless reliability. For centuries, it has served as a universal symbol of wealth and stability. No matter the country or currency, gold has intrinsic value. It is scarce, tangible, and universally accepted. In 2025, central banks continue to accumulate gold reserves as part of their diversification strategies. Nations like China, India, and Russia have increased gold holdings to reduce dependence on the U.S. dollar, especially in the face of shifting global trade dynamics and geopolitical tensions. The steady demand from governments, investors, and industries helps maintain gold's position as the ultimate safe haven asset. When inflation rises or currencies weaken, investors often turn to gold to preserve purchasing power. Its performance tends to be steady rather than explosive, providing comfort to those seeking long-term wealth protection rather than quick gains. Bitcoin, on the other hand, has grown from a niche digital experiment into a globally recognized asset class by 2025. Its market capitalization fluctuates in the trillions, and it is now widely traded not only by individual investors, but also by institutional giants, hedge funds, and even sovereign wealth funds. Bitcoin ETFs have become mainstream in many countries, making it easier for traditional investors to gain exposure without directly managing wallets or private keys. Despite its volatility, Bitcoin's adoption continues to expand. It has evolved from a speculative asset to a legitimate hedge against monetary inflation and government-controlled currency systems. With a fixed supply of 21 million coins, Bitcoin's scarcity makes it deflationary by design, a direct contrast to fiat currencies that lose value through endless money printing. In an age of increasing digitalization and distrust in central banks, Bitcoin represents financial independence and transparency. When it comes to safety, gold still holds the upper hand in 2025. It is a physical asset, immune to hacking, technological failures, or cyber threats. You can hold it, store it, and sell it anywhere in the world. Even if the internet were to collapse or financial systems were to freeze, gold would still retain value. Bitcoin, however, exists entirely in the digital realm, which exposes it to a different kind of risk. Investors must secure their holdings using private keys and digital wallets. If those are lost, stolen, or hacked, the assets are gone forever. Although blockchain technology itself remains secure, exchanges and wallet providers have occasionally been compromised. Governments also continue to debate Bitcoin's legal status. While countries like the U.S., Japan, and Singapore regulate it, others have imposed strict controls or outright bans. This regulatory uncertainty adds an additional layer of risk for investors who prioritize safety and predictability. The Bitcoin blockchain has never been hacked, and with growing institutional custody solutions, the risk of theft has decreased significantly. In 2025, new technologies like multi-signature wallets and decentralized finance, DeFi protocols, have improved Bitcoin's security infrastructure. Insurance options for digital assets have also expanded, making it safer for large investors to store Bitcoin in cold wallets or through insured custodians. Still, for the average retail investor, understanding Bitcoin's storage and protection mechanisms can be complex compared to the simplicity of owning physical gold. Volatility remains the defining difference between the two assets. Gold's price movements in 2025 are relatively steady, hovering around moderate gains as global inflation stabilizes after the shocks of previous years. Its value rarely fluctuates more than 10% within a few months. In 2025, Bitcoin prices range between $55,000 and $75,000, with occasional surges and dips driven by regulatory news, market sentiment, and macroeconomic indicators. While such volatility can be unsettling, it also offers significant upside potential. Long-term holders who purchased Bitcoin years ago continue to outperform most traditional investments, including gold, real estate, and even major stock indices. For investors willing to tolerate risk, Bitcoin's growth potential far exceeds that of gold. When it comes to inflation protection, both assets serve their roles differently. Gold has historically been the go-to hedge against inflation, retaining its value when paper currencies depreciate. In 2025, inflation remains a concern in many countries due to post-pandemic fiscal policies, energy price volatility, and geopolitical tensions. Gold's limited supply ensures that its purchasing power is preserved, and during inflationary periods, demand for the metal typically rises. Bitcoin, however, offers a more modern and transparent solution. Because its total supply is capped, it cannot be devalued by government actions or central bank policies. This scarcity, combined with its borderless nature, gives Bitcoin an edge as a hedge against fiat debasement. Still, its short history compared to gold's millennia-long record means some investors remain cautious about fully trusting it as a stable inflation hedge. Liquidity is another critical factor in determining which investment is better. Gold is universally liquid. It can be sold at banks, jewelry stores, or exchanges anywhere in the world. It's also held by central banks and large institutions, adding credibility and consistent demand. Bitcoin, meanwhile, offers digital liquidity that gold cannot match. Transactions are borderless, instantaneous, and available 24/7 without intermediaries. In an increasingly interconnected digital economy, this makes Bitcoin far more flexible. In 2025, millions of businesses and platforms accept Bitcoin as payment, and peer-to-peer transfers are faster and cheaper than ever before. However, Bitcoin's liquidity can be temporarily affected during market panics or government crackdowns, while gold's physical demand remains more stable. Storage and transport also highlight the contrast between these two assets. Gold is heavy, expensive to transport, and requires secure vaults or safes. Insurance costs can also add up for large holdings. Bitcoin, by contrast, can be stored on a small hardware device or even memorized using a recovery phrase. This makes it the ultimate portable wealth, easy to move across borders without restrictions or detection. For people living in politically unstable or high-inflation countries, Bitcoin offers financial freedom that gold cannot. In nations like Argentina, Nigeria, and Turkey, citizens increasingly use Bitcoin as a safeguard against currency collapse. Gold cannot be sent instantly or divided digitally, which limits its practicality in modern transactions. In 2025, institutional adoption further cements Bitcoin's legitimacy. Major companies now allocate portions of their balance sheets to Bitcoin, and global banks offer Bitcoin investment products to clients. The launch of multiple Bitcoin ETFs worldwide has reduced barriers to entry for retail investors. Even governments are exploring Bitcoin-related projects. For instance, several developing countries are using blockchain-based payment systems for cross-border trade. Gold, while still the bedrock of financial reserves, lacks this kind of innovation. Its role in the modern economy remains traditional, a stable, physical asset held for protection, not growth. Gold mining causes deforestation, water contamination, and carbon emissions. Bitcoin's proof-of-work mining consumes significant electricity, though this narrative is evolving. In 2025, over 60% of Bitcoin's mining energy comes from renewable sources such as hydro and solar power. The industry is rapidly transitioning toward sustainable operations, and some miners are even repurposing waste energy from industrial processes. While Bitcoin's carbon footprint remains debated, progress in clean energy adoption is helping reshape its image from environmental villain to technological innovator. Technological evolution gives Bitcoin an additional advantage. The rise of the Lightning Network and Layer 2 scaling solutions in 2025 has made Bitcoin transactions faster and cheaper, addressing one of its biggest early criticisms. These improvements are helping Bitcoin become more than just a store of value. It is now also a functional payment network. Gold, by contrast, remains static. It can't be improved technologically. Its value lies solely in its rarity and physical form. In an increasingly digital economy, that limitation might make gold less relevant for younger investors who prioritize speed, accessibility, and innovation. In times of global crisis, both assets have proven their worth. During the 2024-2025 geopolitical tensions and trade disputes, both assets surged as investors sought refuge from volatile stock markets. Gold's appeal came from its historical role as a crisis hedge, while Bitcoin's rise was driven by its independence from government control. Interestingly, in regions affected by currency devaluation or capital restrictions, Bitcoin became a practical lifeline for citizens needing to move money abroad, something gold cannot easily do. So, which is the safer and better investment in 2025? The answer depends on the investor's goals. For safety, stability, and long-term preservation of wealth, gold still reigns supreme. It is less volatile, more predictable, and universally recognized. It's the perfect choice for conservative investors or retirees who prioritize security over growth. Bitcoin, on the other hand, offers extraordinary upside potential. Its fixed supply, growing adoption, and integration into the global financial system make it a powerful asset for long-term investors who can handle volatility. While it carries more risk, it also presents opportunities for much higher returns, a modern-day version of asymmetric reward. For many experts in 2025, the best strategy is not to choose one over the other, but to hold both, and a hedge against crisis, while Bitcoin provides growth potential and protection against fiat debasement. In essence, gold represents the past and present of financial security, while Bitcoin represents the future of global value transfer and monetary independence. As the digital economy continues to expand and blockchain technology matures, Bitcoin's role in global finance will likely strengthen,